Financial inclusion is important. It is important because it drives economic growth, it drives income distribution, and it also drives, of course, reduction of poverty. It's very important. And this insight that financial inclusion is a key driver for economic objectives, I think, has really moved into the mainstream of any economic development thinking. Now, having said that, we need to have a quick look at what is going on globally. We know there is a huge access gap in terms of financial inclusion. We know that 1 billion people are still not having access to financial services. But even more importantly, we know that there's a huge gender gap. So 9% is the gender gap, meaning that many more women do not even have the lightest, the most simple access to formal financial services. And we keep on hearing about the economic strength of women, how they manage their household economies, how well they manage their resources, they are good borrowers, they pay back their loans, they maintain the family and whatnot. Now, since we know that there is a connection between inclusion and growth, what do we forego if we don't include these remaining 9% globally? And if you now, translate this into the Arab region, this is even more relevant, because in this region, even 10% is what we count as the gender gap. So the potential to drive economic growth and poverty alleviation is huge. Now, regulators play a very important role in making this happen, because smart policies and regulation can, of course, bring formal financial services to women. And we do that in many ways, through financial education programs, consumer protection, for women, but also, policies that are informed by data that really look into the gender issues. So this is what we are trying to do in the Narrow Action Plan. We are trying to break down some of these global commitments to the regional and then to, of course, the country level. And I think the impact will be huge for the Arab region once this is underway and once everyone has signed up. Now, for the women in the Arab world, I think the key word here is empowerment. This is about empowering women, actually for them to take part in any economic activity, which very often they are excluded from. If you don't have access to finance, you actually cannot leverage your economic potential at all. You cannot connect, to markets. You actually cannot make investments. You're not accepted by banks, as a financial customer. So bringing these services to women will not only help the economic situation, but also will empower them. So we're also talking about breaking down, societal barriers, like cultural barriers and others. And this, I think, is particularly important in the Arab world. Gender equality is also a big objective under the Sustainable Development Goals of the UN. And we believe that integrating women into the formal financial sector and giving access to this group, which is very important, will also make a big contribution to the SDGs, especially to goal number 5, but also all the other goals that are closely related to what we are doing, namely reducing poverty and promoting sustainable growth. As I said before, if we manage to really broaden the access and the usage of financial services for women, this will have an enormous impact on their economic situation, even on the lowest level. And I think integrating women into these economic cycles will not only have an economic impact, it will also have a social impact. It will actually have an impact on social equality, which is a key objective under the under the Sustainable Development Goals. Having said that, we should also see that the whole range of SDGs, the Sustainable Development Goals, also cover other elements that we are tackling at a time, be it on poverty alleviation, and others. So, in other words, financial inclusion for women will actually address many of the issues that have been spelled out by the SDGs. In some cases, for example, women are not literate. They are not able to read and to write. Now, banks may come to them with well-intended programs, for example, on financial education. But a brochure, a leaflet, which is maybe very useful in some of the more developed countries, in this context will not work, because it has no sense for the women. So we have to think about ways how we do financial education campaigns. This means, of course, that we are not just driving, through, let's say, small towns or villages, distributing some of this information. We need to use other channels. So in many places, radio is very effective because it reaches everyone and everyone can understand. So it's very important when you look into the design of concrete activities what are we actually planning to do, and who do we want to reach with this? So this is very important. The other one is all the world talks about digital. Now, we can easily go and say, well, Central Bank of Jordan should issue or should do more on, penetrating these markets with digital financial services for the poor. But what if the mobile is actually owned by the man? We do not know who is actually in the ownership of the mobile. If the mobile is with a man, it doesn't make sense. You will not reach the women. You will actually reach the one who already have the mobile. Banks very often issue documents, once you want get access, let's say, to a small loan. The loan might even be available, but language is so complicated for these people that they don't understand what they're actually signing off. So in other words, we need to tailor these products, these financial education programs in a way that everyone can understand it. So either they can read, or they cannot read. If they can't read, we need to find other channels. If they can read, we need, to put it into digestible bits that everyone can understand it. And mobile is a very important device, of course, and these channels are important, but I think we have to make sure that we target the right group.